welcome to BQ Prime. CPI inflation today surprised negatively. It came in at 6.52%, which was the highest in 3 months. Also, after 2 months of when prints were within the RBI's target range of 2 to 6%. So, joining us today is Madhavi Arora to share her quick early insights into today's print and telling us what's expected here on. Ma'am, thank you so much for taking time out.
Yeah.
So it's fair to say that today's print is definitely a negative surprise and also appears well over consensus estimates.
Correct. So clearly, it's a big shocker. I think the street average was somewhere close to 6%. We were around 6.1. And we were anticipating there could be an upside surprise to our numbers because we were seeing from different mandi sources, a little varied number in terms of where the food prices were looking to be in the high frequency data. But we weren't expecting the number to be as high as 6.5%. And it has come of course, on account of the food component, which is essentially led by rice, by cereals, while vegetable prices have actually collapsed because the seasonal corrections is what you see in this period. But also, core inflation has remained a problem. It has consistently gone up in the last couple of months on a month-on-month basis, and this month, the print has been the highest in the year in terms of monthly gain. So clearly, it also disrupt RBI's own maths because if you remember, last week only we met, the central bank had met, and they had downwardly revised their fourth quarter inflation forecast by 20 bips, which looks to be a bit of a challenge for them to now achieve. If going by this number and the high frequency numbers that I'm looking at now for the next reading, I think we will see an upside print even from cereals next month as well, while vegetable prices might still continue to contract, and the core inflation again, which will be led by personal good, could remain sticky. So I think it also shows one very important thing, as I was saying, that RBI just revised down its inflation forecast, couple of months, days ago only. And as we stand today, the inflation trajectory clearly is looking very different. And it also shows that, how unpredictable these numbers are, how uncertain these numbers are, even for a very near term. And that possibly explain why RBI was very cagey in terms of changing its current stance of withdrawal of accommodation to neutral, because they wanted to keep that flexibility of policy in their hands. And that is what probably will save them in terms of not necessarily changing their stance too often, because I think given these numbers, it seems to be a difficult call that they would be able to change their stance any sooner.
All right. So, I'll get back to the cereal inflation print. Like you mentioned, that has been one of the key drivers resulting in a higher than expected print today. Cereal inflation is, again, something we have been seeing at record highs consistently for the last few months. Last year, from what I remember, the government did introduce some supply side measures as well. I do want to understand a little bit more on what's happening in that front, especially considering you also just said that it's expected to continue to remain high, at least in the near term.
So again, I'm going by the mandi prints at this point in time, which is suggesting that, the cereal inflation will remain high. I think they are already taking some interventionist measures in terms of releasing the wheat stock and stuff. And also, there's a big debate in the market as to the, free food grain scheme, which sort of, the extended one has been now withdrawn, while the existing, PDS scheme has now become a relatively easier buy, because, they are now giving grains for free in that PTS scheme. What is the net effect to that on the prices of cereals at this point in time? It seems to be a little difficult to decipher, because technically it should have led to a relatively cheaper cereal inflation, but seems to be a different case at this point in time. But what I made to understand is that the government is also now releasing some buffer stocks to ensure that this spike is being taken care of. But clearly, given that we didn't really see any shocker in terms of crop production this time around, this depicts somewhere there is a bit of a mismatch in demand supply of cereals, and some kind of supply mismanagement itself is leading to this price disruption, which may correct maybe in the coming months or so as we smoothen the PDS scheme. But it needs to be seen, how it really is panning out.
Okay. And even apart from cereals, there does seem to have been a higher print observed in multiple other food categories, the proteins categories, for instance, which were again trending higher for a while. Milk,
Correct.
of course, again, it's been a trend. So, I mean, it does appear that, the RBI's fight against inflation is clearly set to continue for a bit longer than one would have kind of anticipated earlier, just given how broad based the increase is.
Correct. No, I agree with you. Definitely. That's what I said, that it has disrupted their own maths, which is as near term as a week ago or less than that. So it sort of ties their hand, right? I mean, they were aware that core inflation is going to be a worry in the coming months. If you talk about India, especially when the RBI was very comfortable with the growth story for India, and actually were not looking at any, any discernible or any meaningful problem points in the domestic growth story. Obviously, that somewhere depict the fact that we have a strong demand, right, which will feed into inflations in some form or the other. So it just complicates their maths further when, apart from core inflation, food inflation, which was not supposed to be at least spiking up this time around to the extent that it did, is just making their own calculations very uncertain. Their near-term estimates, are going haywire, just like is the case with all of us. And it also, of course, as I said, tightens them, because in the end, RBI has been very clear in the last couple of meetings is that they are, they're watching the stickiness of core inflation very closely, and they believe that it could unmoor inflation expectations, which could lead to second-order effects in the medium term. So that's one, thought process that they have continued to sort of stress on in the last two meetings or so. And this is just getting complicated because the food impact is now going to weigh in the near-term inflation as well. So I think the next print also could be 6 plus. And apart from that, another thing that I would want to sort of talk about is the fact that globally, whatever numbers have come so far on CPI, most of the January prints have actually surprised in the upside. So clearly, global CPI inflation is not declining as smoothly as anticipated by market guys. And tomorrow we will also have this US CPI print, which will be very closely watched by the market participants, because it will obviously have implications on the reaction function of the Fed. So the situation globally is extremely fluid, and also sort of hints that we probably would need much more frequent macro adjustments or policy adjustments, as we get into the year. So I think it's still not over, even though most of us in the last policy saw RBI being on a relatively hawkish side. There was still a very divided market as far as next rate action is concerned. But I think we are getting more closer to a hike than to a pause for the next policy.
Okay, before I actually move on to the what's your expectation from the next policy, I do want to delve a little bit more into the food part of it. I mean, is it what's happening? Is it a completely different set of factors for each food product? What's driving food
Yeah.
prices at
So
large?
see,
Could you explain a little bit?
the point is that food inflation. I think spices is one component which I'm not able to decipher as to what's happening, because in this one year, on a month on month basis, prices have been going up by more than 1.5% every month. Whatever we could gauge from the mandi prices also seem to suggest that there is, upside pressure on the prices of these food. Within vegetables and fruits anyway, there's more of a seasonality, and how the supply chains tend to work. Apart from that, I think, as I said on the cereal bit, I think there's some disruption that has happened with regard to the change in the food distribution scheme. I have a sense that maybe in a month or two it should sort of normalize. So this disruption may stay
Okay.
for a month or two, but I think it might normalize. Apart from that, see, there has always been a supply side disruption that we had seen in food inflation. The NDA government was able to manage it extremely well in the last few years, which had led to food inflation being not as big a worry as it used to be, say, pre 2014-15. So I'm hoping that the supply side, mismatch is being taken care of. But apart from that, I see there was no disruption with regard to any production, estimates. I mean, that we were able to produce pretty healthy in terms of our growth in terms of our output. So I don't think that was a concern. But my sense is that mostly it is the supply mismatch, which could be managed over the coming months or so. But
Sure. All
nonetheless,
right.
near term, it just adds more pressure to you, right? Because the reading comes out to be bad for one particular month, it has a spillover to the next month in terms of the indexation and all of that. So to that extent, your fourth quarter inflation itself would be probably at least 50 bips higher than what RBI was forecasting.
Right.
So
And like you mentioned, you actually expect the next inflation print to also exceed 6%, is it?
looks to be so. If I'm looking at the manding price, I'm doing my numbers more granularly, but seems like the cereal inflation is looking to be a problem, especially rice and paddy. I was looking at those numbers, so they were looking to be still up in the month so far.
All right. Moving on to the RBI's next rate hike and whatever's the expectation. Before this policy meet, I think there was a fair bit of consensus on, like several economists were expecting that this would be the last rate hike and would be followed with a longish pause. And then, of course, we saw a fairly hawkish commentary from the central bank as compared to what was expected. If I'm not mistaken, I was just going through your inflation note, and you actually expect a 50 bips hike. Is that correct?
No. I had generally kept it more open-ended.
Okay.
I had been of the view that to a large extent we are also tied to the West as far as the policy reaction function is concerned. We are still hoping that global disinflation narrative actually plays out well. But as I just mentioned in early part of this interview, that insofar we are seeing upside surprises across the globe on CPI. China's inflation print was very healthy, better than expected. Tomorrow we have the US CPI. As I said, RBI itself is now sort of going to revise up its fourth quarter number, at least in its internal assessment, because next month will also be a little tricky. So the maths is
Okay,
looking
that's
disturbed.
expected to be about 50 bips higher.
Yeah, so
Then.
that could be 50 bips high is what I was saying.
Right.
That it could surprise in the upside, at least of 50 bips, which obviously will mean that the central bank, the market which you mentioned was divided after the RBI policy, which happened last week, probably will get into a consensus again of another hike, at least, if not more than that. So I think we'll have to, it's a very fluid market, very fluid situation as far as the world economy is concerned. My sense is that we need to take each policy as it comes. I mean, if you can go wrong on an inflation number, as which is just due in a week's time, you can understand the kind of uncertainty that we have in our own forecasts.
Absolutely. Okay. So my last question would be, so, all of this while we have seen amidst high inflation, we have seen fairly resilient economic activity despite the rate hikes we've seen so far. What's your current reading of high frequency indicators? Do they continue to remain resilient? Is there reason to exercise caution going forward, especially amidst a tightening monetary policy and global headwinds?
It's a mixed number at this point in time. I don't
Okay.
think we have a very secular trend on the growth print in terms of any economic agent which is really driving it. It's a very mixed indicator data. At least in fact, I was a little surprised when RBI was sounding very gung-ho on consumption, because when you're seeing the company's results now, for consumer discretionary firms also are giving a very cautious commentary, and the numbers are not very healthy. While rural has been on a perennial problem, I mean, you may see a cyclical up and down here and there, but the rural real wages actually have been under stress for the longest time. And in fact, today's inflation is actually driven more by rural than urban. So you can see that rural terms of trade are actually going to get worse with that, because rural CPI inflation is looking to be a bigger worry, while the wages are not actually growing as much. So the real wages are getting even more pressurized. While in the urban sector now you're looking at employment situation which is looking a little bit shaky. So I think demand side could start becoming a problem as we go ahead. Policy uh, transmission hasn't yet fully taken place, so that also will play its part. And to that extent, I think it's too early to say that we are going to be seeing a very healthy growth print as RBI is anticipating. I think they are overshooting the average consensus market number of, say, or six around or sub 6%. And I think they will be revising it down subsequently as we meet the Reserve Bank more again. So I have a sense that at this point, the activity indicators are not giving you any secular trend, which could suggest that, we are poised to grow more than 6% this year in FY24, I mean.
All right. Thank you so much for joining us for this quick conversation. Stay tuned to BQ Prime for more updates on the economy.